how to read a stock chart for beginners, for my intermediates and or advanced that might be joining with me today. If you want to include any of your gems or ideas or how you trade, or if it's very similar to my trading style, right, you're more than welcome to let me know down below in the comments to help the community out. Remember when you were a beginner before. So I want to welcome anyone and everyone onto this particular masterclass educational video here on this channel, because, hey, I believe personally, and maybe you've heard it before, this term, the money is on the charts. Okay. If you haven't heard that before, now you have. Okay. And the reason that is because we can remove a lot of the emotional decisions that we're making based on our buys and or sells in the stock market. Or maybe some of you have never invested in the stock market and you're like, man, this is too risky. I don't understand it. It seems volatile. I may lose money. The technicals or the stock charts will help us remove that emotion a little bit and be more confident about where to buy and maybe where to take some profits. All right. So without further ado, if you're new here, my name is Dr. B. I'm a holistic life and business coach and strategist for entrepreneurs and thought leaders. I've been in the markets for the last 6 to 7 years, actively trading them. So I have traded, at the time of this recording, a Trump market previously and also a 2022 bear market. So I've traded both the upside and the downside, very volatile conditions, very kind of just trending conditions where you really never got a pullback, where you're just holding and it just keeps going up and up and up and up, right? So I think personally that the reason I was successful or have been successful in, all types of markets, long-term and short-term, is because the charts have been where the money is, right? Because I'm better able to make decisions on what I want to do. All right. And we're here for you, for any beginner, for you to do that as well. All right. So without further ado, you can check my links down below if you need to know how to set up a chart on Robinhood. If that's where you're starting, download a Robinhood brokerage. Check the link down below, give you some free shares. If you don't even have a brokerage, you want to download Robinhood, set up your desktop platform with Robinhood Legend. And I have a video on here about that. Just type in Robinhood Legend. If you see here on my screen, I'll be using Webull. Okay. So it doesn't matter what stock chart necessarily you use, as long as you have a nice chart that you can see, you have your watch list where you want to click through different things, and we can have some different indicators that we'll go over. All right. So with that being said, without further ado, I will walk us through this little outline I have here. And on each particular bullet point or section, what I want to do is go to the chart to explain it. All right, we good? All right, let's jump into it. So introduction to charts. What is a stock chart? A stock chart is simply, in layman's terms, the price of the stock and how it moves throughout each candlestick and based on the interval that you're looking at. Okay, so if I look here, a stock chart, it includes the price movement or the price action of said stock. And in this case, today on this video, we'll be using Apple as an example. So I can see Apple, how it moves, right, on a y-axis with the price and also on the x-axis with the time interval I want to see. All right. Now, what you'll also hear is that the stock chart is termed technical analysis. Okay, technical analysis. The second piece that you want to understand, if you're putting it in two buckets, is fundamental analysis, which a lot of you have been typically doing for your whole life if this is the first time you're really looking at a chart. Okay, fundamental analysis is the news, your emotions, earnings, economic data. So you have outside of the charts where everything's affecting the stock market, right? The White House, President Trump, a unfortunate killing of the CEO of United Healthcare, a positive earnings report from a company. You have consumer sentiment reports that come out that are saying the consumer's not spending anymore, or you have the Fed that's cutting interest rates. That's economic data. So all of that is technically inclusive in fundamental analysis. The stock chart is technicals, how the price is moving at certain levels. Okay. Why is it important for investors and traders? I think I just answered that question. It removes all the intangibles. Okay. Meaning I don't have to get emotionally charged because what is President Trump going to say? What are they going to do with interest rates? What is my friend saying? Oh, this person told me not to invest right now, right? It removes all of those things and it gets you in a state to make better decisions for you and how you want to invest and your risk tolerance. Okay. We can know where buyers and or sellers are based on how the stock moved at that price, because patterns repeat themselves on the stock charts. Okay. And you'll see that in just a second. The type of stock charts. Okay. This is how the chart looks in front of you. Okay. So the line chart is what a lot of folks look at on Robinhood. Okay. So if I switch here, it will look very similar. So I can go here and switch how it looks. That is what we call a line chart. Well, Brian, what's the best? There's no best. It's simply how your eye fits it, right? Now, a line chart is not going to give you as much price, how the price moves to detail as a candlestick chart, okay? So you see the next type of chart is a bar chart, and then the candlestick chart is the most common. So I'll go to a bar just so you can see how that looks, right? Like that, okay? See the bars. And some of you have never seen this before. You're like, okay, I don't like that, right? Or maybe you do. But a line chart is probably what most people are familiar with if you look at Google Finance or if you look at your Robinhood app and you just see that line going up and down, okay? So a line chart, in my opinion, for beginners is a great place to start because you can see the change in direction of where the stock gets to a peak, pulls back, gets to a peak, pulls back, gets bought back up, pulls back, gets bought back up. So you can see the change in direction a little bit better. So if I'm teaching this to a one-on-one client or to anyone in my community in Leverage University or anyone that just asks me, I typically will start from where they are, which is, hey, I only have Robinhood. I just see these lines. I don't know what they mean. Okay, well, let's start there. And I want you to point out the peaks and the valleys. Just start there, okay? And they'll start pointing out, okay, well, there's a valley, there's a peak, there's a peak, there's a valley, there's a little smaller peak, and then it falls, right? So a line chart is not bad to start off with, but what I'm going to be showing you today is going to be the candlestick chart, which is where people start to get a little bit confused, okay? So I want to make it simple to start off here so you can see the movement of Apple, right, over a period of time. Okay, I'll switch to the candlestick charts for you to see, and then we'll start right here of the layout of a stock chart. Okay, so on the right-hand side, I will have the price of said stock. Okay, so if you see here, here's the basic components is what we're on next. Okay, basic components. So the ticker symbol. So if you've heard of ticker, I know anytime I mention that, like people are like, a who, a what? I mean, what you're looking at, the company, okay? The short version of the company, okay? Apple's ticker is AAPL, okay? That is the ticker. So if I want to look at Microsoft, MSFT, if I want to look at NVIDIA, MVDA, okay? That is called a ticker, okay? Or the company or the index that you're looking at. For these examples, I'll stay on Apple. Okay, so you have your ticker or the company or the index that you're looking at. Right here, for my S&P 500 people, here's SPY, right? Here's VOO for a lot of my long-term investors as well. And you may have that in your retirement portfolio, right? I can go to Bitcoin. Bitcoin has a chart, right? So BTC, right? So I can look at the price instead of everyone saying, well, Bitcoin's going here, Bitcoin's going there. I don't care what you're talking about your opinion. I'm going to look at the chart. Okay. The chart will tell me. So let's go back to Apple. So we got our ticker on Apple. We have the right hand Y axis is the price. Okay. The price of what you're looking at. The bottom X axis is going to be shows the progression or the timeline or the interval. Okay. So we have the price, we have the interval or the timeline. Okay. And then you might see here this time frame. Okay. What am I looking at? The interval. So I have these different M, W, D, 4 hour, and then down into the M's, which are minutes. Okay. So you always want to work right to left. So you want to start off on the higher time frames, and you can start seeing where Apple and what it's doing at specific levels. Okay. So I'll start off on the weekly and show you how to read essentially a stock chart. That's the whole question that everyone's wanting to know. All right. So we need to learn how to read a candlestick, and then I will go into the bigger view and summarize it. So this is called a candlestick. Okay. A candlestick shows the price of Apple in this particular week, how it moved in that week. So on the time of this recording, it is a Monday, okay, April 14th, 2025. A new weekly candle has just opened, okay? So let's start off from last week, and I want to read this green candle. So last week on a green candle, we want to start off on the body of the candle, at the bottom of the body, okay? So I want you to follow my cursor here, okay, right above my head. I want you to follow the stock price of Apple. So if I read this candle, I start at the bottom of the body on a green candlestick, and I say Apple opened the week at 177.21, pushed down to 169.21. People bought the dip, buyers bought the dip, and rode it all the way back up. Look at my price to the right. Okay, rode it all the way back up, to the top of the wick of the candle. Okay, or you may hear shadows is another term, but I think wick resonates more with people. Okay, the wick of the candle goes all the way to 200 and then closes that candle at 198. So last week, if you would have bought the dip, right, at 170 and rode it all the way to 200, there you go. So we had roughly a $30 move on Apple last week. Okay. That's how to read that candle. Now, on a red candlestick, it opens at the top of the body of the candle and pushes up on the wick and then gets sold off to the bottom of the wick and closes. So let's read this one together. We opened a new week. Remember last week, Apple closed at 198. You wake up on Monday and Apple's at 211. And you're yelling and screaming, see, I told you Apple's going crazy, right? And people a lot of times ask, why did it sell off? Because people are taking their profits. If you had a $40 move on Apple and you had 100 shares, 200 shares, 1,000 shares, and you're trading it, people are probably going to trim some profits. This was, the natural movement. It does not go up in a straight line, okay? For people who think that it does, all right? So it opened the week at 211.55, pushed up to 212.91, and pushed all the way down or sold all the way off to 201.40, and then closed right now at the time of this recording, Monday at 202.49. Okay, or 202.52 right there. Okay. So that's what's happening right now as I'm reading Apple from right to left. You read a stock chart from right to left, not like a book. Okay. So if I zoom out a little bit here, remember when I said that key statement, the money's on the charts, and I can know without emotion based on what Apple is doing at specific levels. So if I go to my left, why did Apple sell off today? Well, watch this, okay? I'm going to do this very quick, and I want to show you. Well, if I drag this over to the left, well, what did Apple do last time? It got to roughly, in this area, right? 215, it sold back off to 206 and 205. Well, where's the bottom? Where's the dip? It just keeps on dipping. Well, as it was dipping, one thing I can do is I can go to the left. So if you saw all this selling on Apple, right, I can go to my left and say, well, last time Apple got to 195, it got bought back up, right? So if I want to buy Apple shares, maybe 195 was a decent buy opportunity, 190 to 195. You could pick up some shares of Apple, okay? If I'm a long-term investor, I'll get to my traders in a second, but I want to keep this as simple as possible. I'm just talking about people that want to buy shares. Like you're asking a simple question, like how's the chart help me if I just buy and hold or I'm scared? I look left and see where buyers stepped in, right? Buyers step in where there's a change in direction. So if you ever want to know where hedge funds, how does Warren Buffett know where to buy and all those types of things, right? They're always scamming us, right? The billionaires. Well, on a chart, I can know exactly where they're buying. Last time Apple got to 165, bought up. Last time it got to 165, bought up. Last time it got to 195, bought up. So I can go ahead and mark these big buy zones of Apple just in case it comes back down to those levels. Okay. So you may have your alerts set on. If you did not know that, you can set alerts on your chart. All right. You can also set alerts in like Yahoo Finance and things of that nature on your phone, but create alert when Apple gets below 178. Because I've already marked it. And I'm like, cool. I'll go in and buy. I'll call my broker, right? I may have an automatic buy Apple 10 shares at 180 if it gets down there. So you can automatically set these things because you've already charted it out and you know where the buyers are. You see this change in direction right there. Now let's go back to that line chart. Maybe some of you are like, man, these candlesticks still confusing me. Okay. Well, there you go. Valley buy, valley buy, valley buy, valley buy, and there's another valley buy. Okay. Get me? We following thus far? Okay. And I'll keep progressing as we go on. You'll start to understand it a little bit more as I add on more stuff here throughout the video. Okay. So let's go back here. So we've gone through the ticker symbol, the time frame, the price of the stock that we're looking at, which is Apple in this case. And then the x-axis shows the time frame or the progression. So I can go all the way back to Apple on a higher time frame and say, man, what did Apple do during 2020? Right? There's 2020 right there. It dropped from $80 down to 56. And correct me if I'm wrong, but I do believe Apple had some type of stock split, I believe. So that made it cheaper. So don't correct me if I'm wrong, but Apple made this move. Okay. So with that being said, I'll come back here and go to candlestick basics. Okay. Which we just went over. The reading of the candlestick, the open, the high, the low, the close. Okay. All that means is exactly what I just gave you. Let's go back to that weekly candle. And I'll mark it for you. The open. The high. The low. And then the close. Okay. A little bit jumbled there, but you can see here that if I zoom in, the high was at the top of that candle. Okay. The open on this red candle was at the top of the body. The low thus far this week is right here at 201.25. And then the close thus far of that candle is right here at 202.57. So that's what that means. If you're more of a type A person and you're following along, what I'm saying is that's the open, the high, the low, the close. That's how to read a candle. Okay. So if I were to move these to this green candle, we have an open. Remember, body of the candle opens. We have a close, which is at the top. We have a high right there, and then we have a low. Okay. So essentially the only thing that changes between a red and green candle is the open and the close. Okay. Let's erase that. If you made it this far in the video, if you can hit me a like, a subscribe, a notification bell, ding, that'd be great. If you want to go ahead and comment and leave me a comment saying I'm getting it, I'm following along, just keep going, right? Please let me know down in the comments if we're starting the video out correctly. And if anything that you would like to be improved, we'll keep adding these as we go along. And if you want to learn more, you're more than welcome to join our university Discord down below, where I'm teaching, educating, live trading, entrepreneurship, thought leadership, building businesses, all that kind of stuff is in the link in the description, which is Leverage University when you click on my website. All right. Let's keep trudging along here. We've got the volume bars. Okay. The volume bars, which I've had people say this before, which is why I wanted to include it, is like, which candlesticks are you talking about? These things down here? No, that's volume. Okay. Volume. So the bigger the green candlestick, that tells me that buyers are stepping in very heavily. Okay. So higher volume of selling stepped in the previous week. Okay. Remember, I'm still in a weekly candle, right? That first week in April, it was a pretty high volume selling candle, a lot of high volume selling candles coming in here, some high volume kind of, green candles here, but it wasn't as big as the entirety of the last couple months. Okay. So I pay attention to these a little bit. If volume's picking up in one direction or the other, right? If heavier buying volume is stepping in, I'm very much paying attention that might be a big dip buy opportunity. Right? If I look over here, see these high volume candle nodes right here, a lot of high volume stepping in, a lot of green candles stepping in. So if that's the pattern that's starting to step in again, if I'm starting to get that high volume buying volume, then that could start stepping in a little bit more. Okay. So I'll pay attention to it a little bit, but I kind of, just glance at it and still just watch the price action on the charts. All right. So that's volume. Key patterns and indicators. Okay. So let's go over, and this can get complex because a lot of people have a lot of stuff on their charts. You'll see lines going all crisscrossing, all these terms that you're like, I have no idea what you're talking about, right? This is a beginner video. So I'm going to keep it simple with support and resistance, some moving averages, and trend lines. Okay, let's keep it really simple. Right, so let's start off with trend lines. Okay, I'm going to keep it on a weekly candle. And if you were to look at Apple right now, remember we read it from right to left. Is it making higher lows and higher highs, or is it making lower lows and lower highs? I'll show you with a trend line. Okay. Here, back in April of 2024, a year ago, Apple was making higher lows. Okay. See there? Low, 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 trending upwards. Okay. And making higher highs. Trending upwards. Like that. Okay. So the trend in the short term on a weekly was going up. But if you see here that this is a little bit different story. We're starting to now change trend on a bigger time frame, a monthly or a weekly. So when you're changing trend on a bigger time frame, right, you cannot time the bottom. You can't just say, oh, this is the bottom, we're not going any lower. It can't go any lower, right? Because the entirety of the trend has changed. So now we're making lower lows and lower highs. The trend changed. Okay. So when you're seeing this, the chart tells you that it can go lower. So you don't get freaked out if it starts selling again even more. Right. And that's what frustrates folks that are making decisions based off their emotions and no chart in front of them. Okay. Is that I'm talking about the beginner more specifically. Okay. My long-term, my folks that have been in the markets for a while, I get it. You may be saying, just buy and hold, just buy and hold. It's not hard. You don't need to learn the charts. I get that. But if you want to become a better buyer, if you want to have better averages, If you want to know when to hold on to cash a little bit longer and when is a recession coming, and man, I wish I would have had cash like I did 2-3 years ago, I would have bought this dip up. I would have stopped spending a year or two ago, right? We can know when these potential things are going to happen because it's repeated patterns, okay? So that being the case, this is a trend line, okay? So I kind of connect the dots here from the top and I draw a trend. The trend has changed, okay? The trend has changed. Sometimes I'll connect it from there a little bit and make it a little bit better like that, make it a little bit cleaner. So that's how the trend looks. So that essentially means that it's in this channel until it changes trend with volume back up like this. So anytime someone is like, man, I thought we were going back up, and then we sell right back down, it's like, oh my gosh, still. So you have this back and forth of emotions, but when people look at the charts, we're not surprised by that. We're in a downtrend right now, right? Until this changes, every pop is going to get dropped. Every pop is going to get dropped until the trend changes back up. And I looked left. Okay. I look left and see when we got back above 238 on Apple, that's when that trend got knocked back down right here. Okay. I'll mark it for you for folks that just can't see it. See that line? 235 sold. 232 sold, 235 sold. See how we got underneath is 235 and see how big that selling candle is right there? There's a reasoning why. Look left. It happened last time. It happened last time. So if a trader or investor is telling you that, hey, we're probably coming lower, here's the level it's coming to, if they are looking at a chart, believe them. If they know what they're doing, because they're essentially reacting. No one's guessing. We're reacting to what the price does at a level. If it breaks below 235, I can see where it's going. Back down to 214, back down to 195. Okay. So now we're forming a downtrend, and potential another downtrend. All right. So those are trend lines. Okay. So let's go back here. I skipped ahead a little bit. Those are trend lines. So you want to trade typically or watch the trend. Are we trending up or are we trending down? If we're trending up, then yeah, every dip bought, we're going higher. But if the trend has changed a little bit, right, we might come lower because we keep forming lower highs, lower lows, lower highs, right? So I want to have those buy zones ready to go and sell zones. All right. So that takes me to my next piece, which is going to be support and resistance. Okay. Support and resistance. So on a bigger time frame, like a weekly candle, or excuse me, a weekly chart, I'll go to a line chart and simplify it a little bit, and I'll switch back to the candlesticks. Okay. And what I tell anyone to do is start from the supports. Okay. From where we are right now. Okay. Where do you see a bounce or a change in direction back to the upside? Okay. Support is a floor. Okay. You can stand on it. All right. That's signaling buying opportunities. Okay. So if I see a big bounce or it hit the floor and bounced off, or you hear a person say support, right, and it bounced off of there, I want to mark that level. Okay. Right there. And that was roughly at 188, right? And some change. Okay. And as you start seeing me progress, you'll start seeing, me have a zone, and I'll show you what that looks like as well, because it doesn't always act exactly at the level. I just want to have different zones. So I'll mark that as the most recent support. Okay. Where's another support that you see? Look left. Well, right here. Yep. And sometimes I'll just drag it all the way over to see. It's like connecting the dots for those non-geometry folks, right? I like to drag it all the way over to see if it's what we call confluence, connecting the dots. Are there any other intersections of what happened at that price? So if I mark Apple 188 and I go over to the left, what did it do last time at 188, 190. Well, there was some action. It sold off underneath 188, right? It got up to 190 and kind of struggled. So it's a pretty important level. A lot of action around this 195 to 190 level. Okay. If I go down here to this 165 level on Apple, a lot of more action, right? Buyer stepped in, right? But if it starts to get underneath that level a little bit with selling pressure, it can fall to the next level of support on a weekly time frame, which is all the way back down here at roughly just say 130, 128 and some change. I'll just mark it as 130. So now you know as it's coming down where the dip buy opportunities will be. So when you hear a person say, you don't time the bottom, just keep dollar cost averaging. And a beginner's like, well, how do I do that? Well, step one, since this is a beginner video, you can go into your brokerage, okay? Go into Robinhood or wherever you invest. It could be at your bank or whatnot. And you can turn on a recurring buy, okay? And you can set it as an automatic pull, right? So just say you want to do $5 a week on Apple. You can go into your brokerage or Robinhood and say, buy $5 of Apple every single week. You can say buy $100 of Apple every single week and just turn it on that recurring buy. You can do it monthly. Some people do it daily. Okay. So that's the easiest way to long-term invest. Okay. Is just turn it on recurring buy. Now you're here on this video because you want to learn a little bit more. Okay. You want to learn, man, where's the best buy opportunity for Apple? Well, now you've got it because of the charts. So last time Apple got to roughly 190 or so, right? It was previous resistance turned support. I'll talk about that in just a second. If Apple falls to 165, pick it up heavy. If it falls all the way down to 130, pick it up heavy, right? Take your emotions out of it. Well, Apple's never going to fall back down to 190. It may not. Let's draw another trend line. Look at that. Pull back to a trend line, pull back to a trend line, pull back to a trend line. So it's holding its weekly uptrend over a course of the last 6 years. So this was a great dip buy opportunity at Apple just below 190, right? Now, Brian, what if this trend breaks? What if it breaks underneath there? What if it gets underneath 188, 185? Well, you can just look left and see where it's probably trying to head next. All right. So I'll mark some, as I call it, like micro levels. So do you see some of these other dips that could be stepping in? So I'll mark that. I'll just change the color there. See that 180 bounced at 180. Okay. And that kind of had a little bit of confluence right there. Kind of got close to that 178, 180. Okay. So that could be a next little zone. If it breaks below 180, there's probably nothing but room down back into 170 and 165. Okay. So I mark these as support zones where I want to buy, because that's what everyone wants to know. They don't want to know when is it going to sell. Okay. So let's zero out on this and mark resistance zones, or you might hear ceiling, right? Resistance, it goes up and comes off the ceiling. Okay. So on Apple, there's some ceilings that have been happening. Okay. And I'll mark that one more specifically because it has the most touches. So my eye initially gravitates towards, where do I see big changes of direction as Apple came down? If I look from right to left. Well, Brian, I see it here and some other areas. Yeah, you can work your way and add more levels the more information that you need. But I see some touches here at roughly 230, right? 230, 230, got up to 235. So maybe I'll mark here and I can draw a zone. So anywhere in here was technically what we call resistance underneath that 235. If I turn it back on my candlestick charts, it should look roughly the same. See that zone right there? 235, 235, 235. So I'll mark that zone as a big resistance level. Okay. Now, if I go over to my left, there were some more big resistances that kind of stepped in that I want to just pay attention to, which are right here. Okay. Right around that 195. Okay. So Apple dipped below it, but it reclaimed it. It got back above it. Right. It got back above that resistance before it started tumbling down to that 170s level. Okay. Buyers bought up the dip. Now, here's what I was going to summarize for you as I go through resistance and support. Okay. When you break a ceiling, okay, it then becomes support. I'll repeat that again. When you break a resistance and you get above it, like we did here, it then pulls back and becomes your floor. All right. Let me erase that again and use this. This was former resistance back in the day. All right. Couldn't get above this 195, 195, 195, 195. Couldn't get really above 200 on Apple. Just couldn't break it. Finally broke above 200 and went parabolic to 255. But a lot of times what stocks like to do is they like to come back to that resistance that they broke and it becomes support. Okay. Former resistance becomes support. Now, Brian, what if it gets back underneath there? Like, what if this doesn't hold as support anymore and it starts coming underneath again? Well, now guess what? It's starting to repeat this pattern over here. So the further it gets underneath that 195 again or 200, I got to turn that back to resistance. Where is it going next? There's a big resistance that might turn support, 176. That's my next support level. Right? Look left. Former resistance, broke above that, started to become support, become support, become support. A lot of buyers stepping in right there at that 176 level, finally broke above it. So this whole zone right now is the next big area that Apple could head towards if the market gets even weaker. So now you've got a way to wait for to buy this dip. Right? No one is saying exactly what's going to happen. We're reacting to the price. Do you see the difference in the charts? Is we're reacting to what the price does at those levels that we mark. Okay. So we've gone over trend lines, right? We've gone over the support and resistance. Okay. And now we'll go over some moving averages. Okay. So I want you to stay with me right here. Stay with me. The moving average, we'll just keep it this simple. Trend lines, support and resistance, moving averages. Okay. And I'll add one final piece, which is right here. Okay. I'm going to add a bonus price action. Okay. I'll add a bonus. Alrighty. So as I'm clicking here, this MA means moving average. That means the average of the stock price over a period of time. So I can go in here and I can select the length. Okay. So you typically, for those beginners that are starting out, you typically want to have a 200, a 100, a 50, and a 20. I like to have all four personally. You may see another investor have only a 20-day moving average or only a 50-day or only a 100-day, right? I like to have all four because it just gives me a little bit more information, okay? So I want you to look back in history. I'll keep it on a line chart, and I want you to see Apple over time, what it does when it gets below and above some of these moving averages. So what did Apple do when it got below? You can see the color here at the top, this teal or Tiffany blue, which is the 20-day moving average on a weekly time frame. When it got below it, it started selling pretty drastically. This was 2022. The bear market, 2022 was right. There's the end right there. Okay. 2022. Excuse me. There we go. 2022 bear market right here. It got underneath that 20-day moving average and then drastically got underneath the 50-day moving average and then finally got some support at the 100-day. But did that stop it for the rest of the selling year? No, it bounced significantly. People bought this dip at the 100. It ripped all the way back from, look at my price, 130 back to 170. $40 move. And then when it got back up here, it's still forming lower highs. Remember those trends I was telling you? All right. See that trend? Lower highs, lower lows. Okay. So it could still pop all the way up there and then sell lower. And then it ended the whole year back at 128. Okay. That was a bear market. Okay. So if I look where we are currently, we have gotten back below the 20. We rejected and got back underneath. Rejection means ceiling, right? Went up, rejected, right? You see that? Couldn't get back above that 50, went lower. Now, what does it do at this 100? Right? So yeah, it could bounce off this 100 and go right back above to 230 again. Hopefully you're getting it. So you're saying, Brian, this is just a repeat almost of 2022 potentially? Yeah. That's what investors that are looking at the charts are seeing. So when you hear that, hey, we're in a bear market, it could come lower, and you're just not believing it. Man, they're just fear mongering. They're trying to scare folks out. No, look at the chart. It's gotten below the moving averages here. So we're forming lower highs on a trend and lower lows. Very similar to 2022. So it can come lower. What if it pops up again and then comes down one more time to that 170? See that? So don't be surprised if we pop again and we could sell off again one more time. Remember, we need to change this trend dramatically to get up out of this, to go back to all-time highs in the short term. In the short term. So if you want to be a better buyer, the charts will help you do that because you can mark out exactly or a zone where heavy buyers or hedge funds or big money, as we call folks, right, where they buy. That's what you want to know. How am I always missing the move? Now, if I go back in history all the way to 2008, I can see what happened in 2008 as well. Right? Let's come here and I'll keep my moving averages on. Here was the housing market crash because you'll see people comparing it, right? Right there. All right. So it got below that 20, got below the 50, right? Bounced up, formed lower highs, dropped back below them and crashed even more. Okay. So those moving averages help us, right, to say, are we in a downtrend or a bearish nature, or are we in a 2021 scenario, right? A 2021 scenario was here. We got significantly above all the moving averages, holding. We're on an uptrend, but now we're back below them. Okay. So you can use the moving averages as levels of, as we call, confluence. And as you can see, if I mark the level, it should be right at that, level that I already marked. So they're just helpers. Indicators are assistants. They help you based off of what you've already charted. So if I chart support, resistance, if I chart my trend lines and I turn on the moving averages, then sometimes it'll be right at where I am, right where I'm looking. Right? So if I mark that 235 from earlier, I was looking at that as resistance. All right, I'll turn it red for you. Remember that? 235? Well, that's ironic it started to get underneath that 20-day and then drastically sold. Got underneath this 50-day, drastically sold. So these became indicators of weakness. Got underneath them, right? They're like support lines. It's just losing life underneath it, okay? Until it starts holding and reclaiming back above those moving averages. So do you see why I'm saying now we got to get really back above 235 for Apple to really, 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 really kind of take off like that in the short term? Long term, yeah, you can say what you want, but who knows where Apple is going to head back to if these tariffs at the time of this recording is still going to be a play. I'm not saying it can come all the way back to 130, but if there is some type of drastic crash or people get scared, yeah, it can come back to 250, 130, 150, 170. Those are support zones. So it staircases it up, elevators, staircase down. And then over time, elevator back up, staircase back up, elevator back down. So over a long period of time, you will see that Apple is still on an uptrend. So there's a monthly time frame to give you a better idea. Now, do you think Apple's going to pull all the way back down to $116, $67? Doubt it in this day and age, but no one knows, right? No one would have ever expected that Meta would go from $382 back to $93, 2022. So you don't know. That's why it's important to not try to time the bottom, dollar cost average, turn on your recurring buys, and mark your support zones. I'm going to go over to Meta really quick and I'll end you off here. Okay. Let me know down in the comments if this has been good thus far, if this has helped you out a little bit better about getting you started off with charting and how to read it. Okay. Let's mark off Meta back in 2021. So as Meta was going up, right, tremendously all the way up from $135 to $388, almost $400, it can come elevator down just as quick. So if we mark those zones, there's support right there. There's a change in direction, right? 256, nope, blasted through there. All right, well, let's see if it holds up this. Okay, tried to, you see there, right? Previous resistance, turn support, nope, blasted through there. Okay, well, I guess it's coming down to this longer, this deeper support zone at 135. All right, there's the dip. Load the boat. So do you see what Meta's doing now? What if it stair steps its way down again? So I'll mark those supports, support, and then previous resistance turn support. So can Meta fall all the way back down to $400? Yeah, it can. It just dropped from $688 to $530. That's $130 roughly. So yeah, it can stair step its way down and come down, right? Needs to kind of final hold up that bigger level at 377, 400. So yeah, it can. There is a possibility. All right. See how calm I am. Hopefully, maybe you're hearing that, but I have a calm nature about myself because I'm simply looking at the price of the stock and what it's doing. Okay. All right. I said I would have a bonus for you. Let's go back to Apple. Let me turn back on the charts. And let me kind of show you what a day trade looks like. So this was all long-term investing, how to simplify the charts because they're a lot easier on bigger time frames. Okay, bigger time frames. All right, let me go back into this. All right. And let me go into my lower time frame. So if I'm day trading or I want to see what happens throughout the day of the market, I will go ahead and speed round this for you. I will mark where the resistance is right here. So I see that Apple got stuck at roughly around this, just underneath 215, 214. What was that? Previous support turned resistance. So that is a resistance right now. Okay. So I know that Apple needs to get above 214 this week, or this is going to turn into a big resistance level and we can come down. So I'll mark that zone as resistance right now. Right. Then I'll come into my lower time frames, like a 30-minute or a 1 hour. I would go into a 1 hour. Right. And now I've got more information. So if I scroll, you see the timeline here. Now this 1 hour is showing each candlestick being 1 hour. So now I can look back roughly about a week. Okay. You see it right there at 4-4. We're at 414. So this is 10 days of information. Okay. So I'll mark these levels here and see what they did at those levels. And I can make decisions. All right. So where's a big support? I'll do the same thing. Big support down here, roughly around that 178, 180. I'll just draw a zone. All right. I just want to know where buyers stepped in. All right. Here, went a little bit lower there, reclaim big volume off of there. So I kind of want to mark it at 178 roughly. Okay. I've got a trend line. You can see the trend change from lower highs to now higher lows in the short term. Okay. So I want to see it hold this trend. And you can see that now I can make a decision on a day trade if I'm trading it. Okay. You see the difference between a long-term investor and a trader for the actual day is I can trade it up, down, meaning puts, making money going down, put down the phone, and then calls going up. Okay. So if Apple falls back below 200, what did it do last time? If it cannot hold that 200 previous resistance, turn support, and it starts breaking this trend line, right, with aggression. Well, now Apple has the possibility to gravitate back to the next level of support, which is roughly around these different levels that I'll mark, right? And as you get more acclimated, you'll be better at charting it faster, and you'll start seeing it, right? I see some resistance right there, big volume, change in direction right there. So now that could be a support zone, which would be right around that 188. Remember that level we marked earlier from on the weekly time frame? So if you mark the weekly time frames, right, they will start to step in on the lower time frames. Okay. Now, this is a very big weekly level right here that we need to kind of hold, which is that 195. Okay. You see there? So if I mark that big weekly level of resistance, sometimes what I'll do when I get in here, I already have it. Right. So I'll mark it sometimes and just say weekly resistance. All right. You can name it whatever you want, but I just want to know that that's a very big level that we need to hold on Apple is 195, because I'll zoom out on a weekly and see that that was that big level right there, 195, 195. So if I see Apple on the lower time frames, remember I was in an hourly, fell back underneath that red line, it might start picking up some steam. Man, why is Apple selling? I don't care what y'all thinking about. I'm just watching the charts and what it did at that level last time. It hasn't done it yet, so I'm not going to assume anything. Okay. So what if it pulls back to this level and then holds? Right? Cool. It's holding. Previous little resistance right there, turn support. Great. 195 is holding. We're going higher. You see where you can get an idea of where buyers and sellers are, so you know what to do. So today, my group, all right, inside of leverage, we woke up and we saw that Apple was green. This is where a lot of people make a mistake if you're a beginner, is you wake up and you're like, man, Apple's up after hours. It's going crazy. And then you wake up in the morning and it begins to turn red immediately. Man, why is it selling? It's because, first of all, it was right into a resistance, right? Former support, turn resistance. So it just opened up right into it. So folks are going to take their profits, right? If you're greedy and you chase that, you're going to get smacked. Okay. You want to be fearful, or a little bit fearful, when people are greedy, meaning take your profits when people are greedy and getting excited. And you want to be more greedy when everyone gets fearful. All right. So let's make sure I summarize this, putting it all together. Look at trends, uptrends, downways, sideways. Yes. Compare volume with price moves. Yes. Using patterns and indicators to make decisions. We talked about that. Start with simple charts. Like I talked about, start with that line chart, start to mark those peaks and valleys and just say, man, start to formulate. It's called an idea, a trade plan. Well, if I asked you, well, if Apple gets to 195, what are you looking for? Well, I'm going to see if it can hold. And if it holds throughout the day, or I start seeing, it going up off of 195, then that's a support, right, Brian? Yes, that's what that means. It's holding, right? That level, right? If it starts failing underneath drastically, right? Big candle coming underneath 195. It's like, Brian, where's the next level it's going to? Mark that out, right? Mark that out. So it is cool to not trade or not invest. If you work from home, if you work from everywhere, just keep a stock chart up next to you and watch it, in your free time, and start seeing the candles moving back and forth and chart it out and mark your levels, right? And you'll get more comfortable. Oh, that's why it sold off, because I marked my levels and then Trump said something and it dropped below that level. Great. He said something. He exacerbated the move. Or it was at a support and he said something good, right? So I wasn't surprised by this big jump from Apple. It was already in support. Trump says something good, Apple jumps up, right? It was already in support at 170, 180. So of course he just said something good and exacerbates it. It was already going to probably go up. So do you see how the news comes second? The charts, in my opinion, comes first. And then you react off of how that price moves. All right. Always use other research, not just charts. Practice with paper trading or a simulator. So yes, there is paper trading with Webull, more specifically. You can see there, paper trading. I can actually take some trades and, not real money, just paper trading, and go through from there and just play around. There's no paper trading right now with Robinhood at the time of this recording, so you might have to jump onto Webull, which I have a link down below as well. But yeah, practice around, play around on the Robinhood Legend platform, charting it out. Looks roughly the same. And if this video helped you out, let me know down below. I appreciate you all for joining in. I know this was a full masterclass or extensive video. Let me know how I did. I will continue to improve these videos. Thank y'all so much for watching. Share this with a friend. Hit those bells, notifications. Join Leverage University. Should be a little small discount code for you at the time of the recording. And I will see you all in the next one. Peace, love, and blessings. Talk to y'all soon. Bye-bye.